What's up, guys? Welcome to a new video. And in this video, I want to talk about how to draw key levels on your chart because you see this phrase all over the place. And I want to explain how I approach this and how you can use this in your trading as well. So let's get started. All right, so we are at the euro dollar chart. And depending on what time frames you trade, you choose which time frame you start. And I like to start with the higher time frames and work my way down, especially when I'm investing in something for the longer run. So I'm at the euro dollar weekly time frame, and I first start by highlighting key areas on the weekly. And the way I usually approach this is by giving levels on the weekly, one color, levels on the daily, another color, levels on the hourly, another color, and stops and targets also give them different colors. So this way it doesn't get messy, and you know, if price reaches some level and is yellow, I know it's the weekly level and it might be more significant. So that's a little tip you can use. In terms of level placement, I always place it at the extremes of a candle or a swing point, and I usually highlight the most recent extreme the most. So let's say you have a level with multiple touches around the same area. I tend to draw the line at that area because this is the most recent one. To me, it's the most important one. So that's also a big tip. And then in terms of levels, I highlight important swing points on levels. I highlight boundaries, and I highlight starts of trends just before a breakout. So boundaries of ranges, starts of trends, and swing points. Swing point, if you've been watching my channel before, you know this is a swing point. This created this move down. This is a swing point that's important. This was important. This was important. This was important. You get the point. Basically, you want to highlight the most important swing points. And on the weekly time frame, I usually want to highlight those that are closest to price action, because it doesn't make sense to be putting in lines all over the place, at least to me, because you can't expect price to reach this area anytime soon. So to me, on the weekly time frame, this swing high is important. This swing high is important. This swing low is important. And this double bottom. These are the most important areas on the weekly time frame to me right now in terms of levels. So let's go to the daily, and then you have a bit more of a clearer view. Now we're going to look at daily levels, and usually these line up pretty well with the weekly ones. If you're going to zoom in, basically all the swing points have been covered, but this is also a decent swing point on daily. And let's give it another color. Let's give it blue, a bit lighter, it'll be a bit clearer. There we go. So that's an important swing point to me. And also this is one I would be putting in as well, also because this one had a lot of touches, one from below, above. Here you have some structure forming around it, touch here, touch there. So it's quite a significant level as well. So those are usually the best levels if you have multiple touches at the area or swing points. And this was a clear swing point as well on the weekly. So those are the important levels I would be highlighting. Now, another important area to me is over here. People can call it an order block, supply. I don't know what terminology you want to use. I just call it the supply zone, or the last bit of structure before the breakout, because you have to remember markets usually break and retest before they fall down. And this area hasn't been retested yet. There was a quick drop down, no retracement at all. So you can expect price to go up and retest it at some point. And what I found after years of trading is that the market tends to gravitate to the most recent bit of structure made and not the obvious one. So people would be selling a retest of this area, which is the obvious one, but I tend to put my level here because this is the most recent bit of structure before the breakout, which is also here, and that's usually the price gravitates towards when retesting. So that's an area I would highlight, and those are basically the important levels on the daily time frame. Now, how would I trade these key levels? I would wait for my mechanical setup, and I know most of you guys watching don't have my mechanical rules and don't trade mechanically, but these levels are still very useful. And why? Because for the areas below market, I usually want to see this happening on a daily time frame. So a breakdown and then a clean close back above the level. And then if you are more of a discretionary intraday trader, this basically gives you the bullish bias. Liquidity below the swing low has been absorbed. It has been a false breakout. So you have a bullish bias, and then you can go to the lower time frames and look for some range developing. And maybe as soon as structure breaks, you enter at a retest in line with the bias and target the next area of structure, which potentially would be here. So this is how you can approach those levels. This is basically how I approach it as well, but I made it fully mechanical. So there is no guesswork. It's just the rules align and you go long, and that's it. Same question for, same goes for this area. If we look back, this was an important swing point. And as you can see, this is exactly what happened. We got a false break of this high, and then we got a bit of a range, break out of the range, and we went down. And this is exactly where I took my short. I took my short and I targeted this low, but you could also target this area. And this is exactly how I trade. And this is a great examples of how these levels work. So if price goes back up again and we get the same stuff that happened over here, and I get my mechanical setup, I will be short. But if you don't have the mechanical setup, again, wait for the rule, wait for a range, a false break of the range maybe, and then you can enter at a retest of the break of structure and target the next structure. And those are the areas. Now, let's say price just smashes through this level and just accepts below here. Then you can look for shorts around this area. But then again, I would be looking for such areas. So not exactly the level, but let's say there was a bit of a range before here, then the fall down, I would be selling the retest of that range and not this level because of the concept I just talked about earlier, this area. So that's how I would approach this. Now, let me give you another example. Let's take a look at gold. So again, we start by the weekly time frame. If you're just trading 15 minutes or so, it's not really necessary, but it all depends on your trading style. So I've basically marked in the important levels on the weekly. Now, as you can see, there were two touches here, and this was the highest one. So this is where, in my way of approaching things, is the most liquidity if we break both highs. So I marked out the highest point. Here we have this double bottom, which highlights liquidity. And here you have some touches as well. So you could also put in this level as well. But I wanted to put it here because this is the most recent bit of price action. But this is also an important area. Then this, of course, again, swing low, didn't break it, perfect double bottom. But if both swing lows break, you usually get a bigger reaction. That's why I put it on the lower part of the range. Here, clear swing point, clear swing point. So these are the levels on the weekly time frame. These are the most important key areas. Let's go to the daily chart now. Let's start by putting in levels and change the color. This is a key level, 3 touches to a high, no broken range yet. So you can expect liquidity to be up here. As you can see, perfect level here, 3 touches as well. But I'm leaving the level at this area. And there is no real clean level more that I would be putting in this chart. Some people might be putting it in over here because of these touches. And again, it's quite a decent area. And also if you look back, it's quite a decent area, but it all depends on your style of trading. And that's not my style to basically sell this retest. I always wait for this to happen at these levels. But if that's your style, you can definitely look for setups, sell setups over here. So yeah, let's go to the hourly time frame to see if there's something there. Probably not. Only this area would be interesting to me if I would be trading intraday, which I'm not. Now, why is that area interesting? If we zoom out, look at this massive, massive structure over here. So many touches. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So massive area. And though it has been a massive downtrend. So if you want to be shorting, this is an area, especially the blue box. Why? Let me zoom into the hourly so you can see it. The blue box is the last bit of structure price made before the massive fall to the downside. So as price retraces, you can expect to be some open orders here and hit that area and put in a bit of a move to the downside. Now, I'm not very clear on gold in terms of a bias, and that is because of these equal lows below market, but also these equal highs above market. So there hasn't been any liquidity at major zones being absorbed yet. And until that happens, I don't have a bias. Doesn't mean you can't trade it. So if I would be looking for a short, this would be a key area. As you can see, massive level, last bit of structure before the fall down. So you could wait for your setup to happen over here and sell to the next area of structure with a stop above here or whatever your rules say. But these are the most important levels in gold. And I hope you now know how you can draw your own key levels. And I am a mechanical trader, let that be very clear. So in the essence, I don't need to draw these lines at all. If I just follow my mechanical rules, I have an edge. However, from journaling, from testing, I noticed that if my setup happens at these key levels, my strike rate, so my win rate, increases anywhere between 10 and 15%, which is quite significant. So that's why I started with highlighting these areas on charts to increase my win rate and to increase my payout. So hope you learned a lot from this. Please leave a comment down below. Subscribe to the channel for more. If you haven't checked out already, I'm doing a series with BlueFX, proprietary trading firm. We're basically building a free course on YouTube about how to build your own trading system. So head over to their channel if you want to see the free course. You can also go to my website, which is in the description down below. There you can sign up for free, and there you can find a free ebook about the Wyckoff method, a free training, free Forex course, and a link to the BlueFX course we are building right now. So thanks for watching, and speak to you in the next video.